Tim McClone, your $20 million broker. It is a great time to sell a home right now, and an even better time to buy an investment property. You just have to be creative out there. Don't get scared. Don't get scared by all the headlines. Let's break some of this down. Bill says, I have houses, I have rental properties. I won't sell. I will never sell. What would I do with the money? Put it in the Federal Reserve notes, declining roughly at 15% a year. Maybe put it in bonds that got hammered 20% this quarter, worse than 40 years. Hey, put it in stocks valued at 25x earnings. It's all rented, baby. It's all rented. And if it goes down 10, 20%, I still win. Now, ladies and gentlemen, now is still a great time to sell your property or buy investment property. It is an awesome time to sell a house right now. Check out this chart. So, ladies and gentlemen, given the sky high prices and the still very, very, very low supply, and the ease with which a house can still be sold without jumping through all kinds of hoops, the percentage of people who said that now is a good time to sell a home, an investment property, rose by 74% in the same record lofty range since June last year. So just go for it. Put it on the market before everyone else does. Now, when we talk about interest rates, rates closed over 5% this week. It's indisputable, and it's a new milestone. I told you they had hit 5%. I did a video and just a little tongue-in-cheek that they're going to go to 10%, but who knows? But I knew this was coming. And the chief economist of Freddie Mac says that rates are likely to hit 5% by mid-year. Whoops, he was wrong 100%. If you look between the lines, it is not as frightening, folks. For example, take this headline. Surging interest rates push mortgage demand down by more than 40% from a year ago. If you look at the fine print, mortgage applications to purchase a home fell 3% for the week and were 9% lower than the same week 1 year ago. So bottom line, folks, and this, don't take my word, a recent survey by the National Association of Realtors reports that the average home that sold received 5 offers. So if you take this data, and there are 9% less than sellers that would make the new average receive roughly 4.5 offers. So it went from 5 to 4.5. That's hardly noticeable. So it's still strong. Inventory continues to decline below previous records. Look at this chart. Inventory is at an all-time low. You're selling right now, you're looking for a multi-family, multi-offers. So inventory is still declining and contracts are still at record levels. So, you have a lot of people publishing stories to get, views and frighten everyone, but you really have to delve into the data. However, it's not all models and bottles out there, folks. It's not all models and bottles. An investment banker friend in China, I was listening to a conference call. He said this about China. Investors in China will need to get bailed out. The CCP's tradition of corruption means that I will bet that the reserves of food that they bought coincidentally before their allies' invasion of Ukraine may have been resold or not fully bought, with some CCP members pocketing the difference, or poorly kept and soon will be spoiled. Thus, a lot of ultra-rich crooks who have companies dependent or invested in China are now shilling for the CCP. One billionaire's company actually claimed, I don't have any empirical data, they said they actually claimed that Evergrande, and I've done a few videos on this and I've been watching this very closely, that Evergrande was ordered to demolish over a dozen apartments which was not just a dozen apartments, ladies and gentlemen, it was actually ordered to demolish over a dozen apartment buildings with hundreds of apartments each. Take that in. So they, on this call, this information, if they do not shill for China, their investments in China become worthless. So watch out for the CCP linked shills trying to get you to unknowingly gift your money to China. Gift it, because you will never, ever get it back. And in that same deal, the retirement of the baby boomers also will mean that the cost of capital and demand will both decrease each year from some years, particularly because even NATO countries now recognize China as a future aggressor. So this all ties in. There's a crisis going on in real estate over there. You have to look at this holistically, globally, because it affects markets, from micro markets in California, for example, to what's happening in the United States. So I try to keep an eye on all that stuff. So that's just interesting when you listen to that stuff. So bottom line is, though, buyers are having a tough time right now in the United States. We just knew this would be coming, given the sky-high home prices and the spike in mortgage rates. However, mortgage rates, if you look at history, are still historically low, ladies and gentlemen. We've been spoiled. Homebuyer sentiment deteriorated further to a new low. Luxury market, we're still seeing multi-offers on properties and vacation homes. It's incredible. So the percentage of people who said that now is a bad time to buy a home jumped to 73%. Another record worst in data going back to 2010. That's according to the Fannie Mac's National Housing Survey for March, released yesterday, and the sentiment started to deteriorate sharply in February 2021. So they expect to see an even greater cooling off of the housing market than previously forecasted. Fannie Mae, 69% of the respondents in the survey expect mortgage rates to go up over the next 12 months, and we'll have to see, because I did a talk on that, what that means for printing of money in the Federal Reserve. We're getting close to the danger zone. But like I said, it's still historically low rates. So if consumer pessimism towards home buying conditions continues and the recent mortgage rate increases are sustained, then we expect to see an even greater cooling off of the housing market than previously forecasted. And that's from Fannie Mae. So take a look at this. WTF, man. Take a look. The percentage of people who said that now is a good time to buy a home plunged to a record low 24%. But like I said, you look at investors buying up multifamily properties, it's record highs. Record highs multifamily. Luxury market is strong. The combination of ridiculously spiking home prices and mortgage rates that the Fed is now trying to push up. They're trying to push it up further in order to tamp down on the ridiculously spiking prices. It is toxic. It is toxic for some potential home buyers out there. The average 30-year fixed mortgage rate, according to the Mortgage Bankers Association weekly index, jumped by nearly 2 percentage points for September of last year, when mortgage rates were still near historic lows. Once again, we've been spoiled. I locked in rates between 2.2% on my properties to 2.75%. But rates are historically low. 4 or 5%, ladies and gentlemen, is historic low rates. So the economy holistically overall is on the wrong track. Those are surveys across the country, Democrats and Republicans, bipartisan on that. This month we saw, looking at these surveys, the share of consumers expecting their financial situation to worsen, both Democrats and Republicans, over the next year. This was especially true among current homeowners when you break down the report. So what's the 800-pound gorilla, ladies and gentlemen? Inflation. I've been talking about it for over a year and a half, which is soaring consumers' mood around the country. Everyone's talking about it. It may probably has something to do with it. The percentage of consumers who said that the economy is on the wrong track jumped 5 percentage points to 73%. That's according to the Fannie Mae survey, up 51%. In March last year. So the surge of wrong trackers, started in May as consumers became aware of their nasty new companion in daily life, the worst inflation in 40 years. Hyperinflation, possibly stagflation. So we're over 15% inflation if you break down the ladies and gentlemen. So this is, troubling times right now. You have to walk on eggshells and between the lines and be creative out there. The percentage of people who said that the economy was on the wrong track, is higher. The right track, that fell 3 percentage points to 21%. So these concerns, together with the run-up in mortgage rates since the end of 2021, will likely diminish mortgage demand from move-up buyers. and fewer move-up buyers means fewer available entry-level homes. The entry-level home people are getting crushed looking for a home right now, adding to the rising rate challenges for potential first-time home buyers, the report said. But even under $1 million, ladies and gentlemen, we're still seeing multi-offers on properties. I have a client who just bought a house in Running Springs by Arrowhead and Mammoth, and they've been trying for 3 months. They finally opened escrow 3 days ago, and it had multi-offers. It had 4 offers on it, and it needs a full redo. And I drove up there with them because I was unfamiliar with the Running Springs area, and I wanted to get better market knowledge. And before I went to Las Vegas, I went up there, and it's incredible. Their Airbnb potentials up there, properties, a lot of Airbnb stuff. They want to use it as a second home, and there's a lot of opportunity everywhere, and they're multi-offers, and looking at Big Bear. So it just depends where you're at. Multi-offers, holistically, when you break down the data, you went from 5 multi-offers to 4.5, so it's still strong. But first-time buyers are getting crushed trying to get into the market because it's tough. But the tide is shifting. Inflation has added a new wrinkle into this. But ladies and gentlemen, it's still a wonderful time to sell your property. You're gonna get sky-high prices, multiple offers, and investment properties. Companies like BlackRock are going in and buying up multifamily all across the country, which is increasing prices for the smaller investors. But people realize that as an asset class, real estate is strong. It's always there. And I've always said it doesn't matter about the cash flow. It doesn't matter what the equity is, the value of the building. If the building is cash flowing and due to economic conditions and real estate, stocks, and it goes down, you still have your cash flow and you continue to pay down your building every month. I like to touch my building. I can't do that with stocks. Stocks are like water, like I said. Real estate's like boulders. I like to go hug my buildings. I don't want to go walk to the Apple building and say, I own stock in that company. I want my own building. I want to hug my tenants. So it's so easy. I don't get it. Some people just don't get it. They don't get it. They don't know how to manage property. They don't know how to deal with tenants. But it's a wonderful asset class, and so is Bitcoin. Take care. Have a great week.